Assalamualaikum and hello everyone. Today we will discuss the definition of small and medium-sized enterprise or SMEs in Malaysia. This is crucial for understanding the business landscape and the support available for this enterprise. In Malaysia, small and medium-sized enterprise are defined based on several criteria, including the number of employees and annual sales turnover. The official definition are provided by SME Cooperation Malaysia, which is the central coordinating agency under the Ministry Entrepreneur Development and Cooperative. SME in Malaysia are categorized based on their annual sales turnover and the number of employees. Let's break this down by sector. In the manufacturing sector, we have two main categories: small enterprise and medium enterprise. Small enterprise are defined as having an annual sales turnover between 300,000 ringgit and 15 million ringgit, and they employ between 5 and 75 people. Medium enterprise, on the other hand, have an annual sales turnover between 15 million and 50 million, and they employ between 75 and 200 people. Now, let's look at the service and other sectors. Small enterprise in this sector have annual sales turnover between 300,000 and 3 million with 5 to 30 employees. Medium enterprise have an annual sales turnover between 3 million and 20 million, and they employ between 30 and 75 people. Additionally, we have micro enterprise, which are the smallest category across all sectors. Micro enterprise have an annual sales turnover of less than 300,000 and employ fewer than 5 people. To summarize, the definition of SMEs in Malaysia are based on specific financial and employment criteria tailored to different sectors. This classification helps in the formulation of policy, financial support and development programs targeted at this enterprise.
In the event of a default, many banks demand collateral from SMEs in order to grant loans. Any valuable item, whether personal or commercial, that can be utilized as a backup source of funds is considered collateral. It is unlikely that newly established enterprises will have assets to secure a loan, such as equipment or commercial real estate. It is dangerous for new SMEs without established corporate infrastructure to frequently have to pledge their personal assets as collateral. SMEs are viewed as a high-risk group by the majority of traditional financial institutions. They almost always need some kind of collateral, such as property, cars, merchandise, saving accounts, receivable, and so on are a few of examples. If your application for SME financing is denied because you do not have enough of appropriate kind of collateral, you can alternatively present your personal asset as collateral. If this describes your circumstances, consider looking for different finance options like contract or invoice financing.
Other reason why Malaysian SME struggle to get bank loan approved is credit scoring. When determining whether to approve an applicant's credit, financial organizations heavily weight credit scores. Giving money to individuals or companies on terms and conditions that both parties may agree upon is a common definition of credit in the financial sector. If your credit score is poor, you might not be able to get small business loan. When banks decide whether to lend money, they analyze the company's payment history and credit record. This will let them to determine if you can pay them back on time. However, a recently founded business most likely does not have the time to build up a significant credit history. Rather, personal credit records will be used by banks to evaluate borrower credit worthiness for a number of business loans. It is more challenging for business owners to secure funding if their credit histories are less than perfect. Next, bank loans made by SMEs nation are difficult to get approved when the business is too young. When SMEs apply for traditional funding, they are often told that their company is too young. Conventional lenders like banks typically demand that the business be operating for at least 2 years. The bank values the business operation year since it provides insight into its performance and financial health. Younger companies are more likely to fail when applying for bank loans because they lack a substantial financial history. which makes it harder for the bank to evaluate their stability and loan repayment capacity. One of the things that makes it hard for new companies to gain bank loan approval is unpredictable cash flow. This is because in order to guarantee loan repayment, bank give preference to companies with steady and predictable cash flow.
To help small and medium-sized enterprise (SMEs) become stronger and more competitive, the government encouraged the use of digital tools and technologies. Through programs like the SME Digitalization Grant Scheme, financial support was given to SME to adopt these tools. The main goals were to make business more efficient, reach more customers, and adapt to changing market by using e-commerce, digital marketing, and automation. For the benefits, first is to improve efficiency and productivity. The digital tools and automation can make business processes smoother and save time. For example, using accounting software to manage finances can reduce the time spent on bookkeeping and decrease errors. Second is cost saving. Adopting technology can lower operating costs. For example, using cloud service, we can remove the need for expensive physical servers and IT setups. And the last one is enhance customer reach and engagement. Digital marketing and e-commerce help SME reach a larger audience. Tools like social media, email marketing, and online ads can attract new customers and strengthen relationship with existing ones. Next, to address expected economic challenges in 2023, the government introduced measures to support SME through various grants and financing programs. Over the years, Malaysia has launched several initiatives to help SME grow. For example, Business Financing Fund (BSF) is provide flexible funding through interest-free convertible promissory notes (CPN), preference share, loans, and equity. It targets early-stage business to attract market attention and future investors, aiming for rapid market capture. Second one is Market Development Grant (MDG) through Metrade. It offers reimbursable grants up to RM300,000 for selling goods abroad. It helps businesses participate in Malaysia international trade fairs, enhancing brand recognition and expanding global customer bases. It also encourages innovation and adherence to international standards. And the third one is SME Revitalization Financing (SMERF) through MIDF. It provides financial solutions for SME and company in underserved sector facing financial difficulties. It aims to increase profits by covering financing needs in the current economy. Furthermore, the government provides several tax incentives to help SME, especially new ones, save money and invest in their businesses. For example of tax incentive, first one is Start-up SME Tax Rebate for SME incorporated on or after January 1, 2022. It offers a 20% tax rebate on the first RM20,000 of chargeable income for the first 3 years. It helps new SMEs save on taxes and invest in their growth, reducing the financial burden of starting a new business. The second one is SME Special Deduction. It allows SME to deduct 30% of their qualified business automation costs. It helps reduce expenses related to improving business operation. And the third one is Deferred Tax Payment. SME facing cash flow problems can defer their tax payment. It provides temporary financial relief, allowing businesses to better manage their cash during tough times.
To sum up, SMEs are essential to Malaysia's economy because they greatly increase GDP, employment, and innovation. However, because of their short credit history and erratic cash flow, they have trouble obtaining standard bank loans. In order to boost the efficiency and worldwide competitiveness of SMEs, the government supports digitization and provides a range of grants and financing programs, including the Business Financing Fund and the SME Digitization Grant Scheme.
It is advised that the government keep growing its financial assistance and training initiative, with an emphasis on digital skills and money management in order to further support SMEs. Furthermore, mentoring programs and more accommodating lending standards can assist new companies in overcoming financial obstacles and achieving long-term expansion. That's all from me.